Hi, welcome to the Invest in Value channel. My name is Victor, and in this video, I'm going to analyze a bond that's issued out by the University of California system. This is a system that provides public higher ed to students all over the country, as well as international students. I graduated from Cal State University of Long Beach with an accounting degree, and then I got an MBA from the California State Polytechnic University at Pomona. Before I jump into analyzing this particular bond, let me go over what I'm looking for in a really good investment. First, I want a discount on the investment. I don't want to pay fair value. I don't want to pay a premium. I'd love to get a discount on the investment. Two, I want an investment that's performing well. And then three, is it the right time to buy this investment? Okay, so here's the information page for this bond. It has a coupon rate of 2.047%, but as you'll see in a little bit, it actually has a better yield than that because you're buying it at under the par value of the bond, meaning you're getting a discount on the bond and your yield will be higher than that. It has roughly 10 years to maturity. It matures May 15th, 2032. Lately, interest rates have gone up significantly, and bond prices tend to have the opposite reaction. When yields go up, bond prices go down. Let me show you more on that. So here's the 10-year treasury, and the yield is at 2.774. Not too long ago, beginning of 22, it was like 1.5. So we're up, nearly double the yield on a 10-year. So that's really created a lot of fireworks or a lot of change in the bond market. You're seeing bond prices really drop. And it's becoming interesting to me because, in years past, bonds were just really not performing at all. You were getting 1 or 2%, yield, which was terrible, and just not really performing. Now, as I look at the all-time, graph for yields, you see how we've been in a really low interest period for like 10 years. It's been a long time since we've had, interest rates anywhere, higher than 3-4%. But I'm going to go back to the 2000s, even in the 90s. And the reason I'm going to do that is you see how the interest rates were, between 5, 7, 8%. And in that time, I remember Bill Gross, the bond king, his mutual fund would compete with stock mutual funds, very close to the same performance as a stock mutual fund. And that was really commendable. And it made him a fortune because investors would rather have their money in a bond that had very definitive, futures or the very definitive schedule of when they would get dividends, what the value would be at the end of the maturity. All those things, create comfort for an investor, and Bill Gross was able to do that. I think if we get interest rates, higher than 2.774 on the 10-year, you're going to really begin to see bonds take off. I'm trying to find investments that are good now and potentially could be great later, and bonds just may do that. Now, why am I doing all this? If you study or watch the other videos that I produce, most of them are on stocks. Stocks make up most of my portfolio. And the reason I'm doing it is that the S&P year to date is down 8%. The news is really negative for the remainder of the year. Not sure we're going to, be positive on the S&P at the end of the year. We may be down 20, 25% at the end of the year. Put together a valuation model as well as a yield model for this bond. Let me go over some of the details and then get into the yield. So first, this is the bond. The symbol is right here. It's a taxable municipal bond. It's AA rating. It has a maturity value of $100, just to keep things simple. And the current, 10-year treasury rate is 2.76%. the yield on this particular bond ends up being 3.691%. Your yield comes in two ways. First, you have a coupon rate that's defined in the bond. It's 2.05%. But the difference between 2.05% and the 3.691% is that you're buying the bond at a discount, $83.59 for a bond that will be worth $100 in 10 years. So that difference is you're making it, a little bit at a time each year. And that little bit added to the coupon rate adds up to $3.69 per $100 invested in this bond. So this is a defined rate of return on a bond. What's nice about a bond is what it's going to be worth in the future. I will get $100 in 10 years. I will also get a defined rate of return, an annual yield on that $100. Okay, so let me summarize this bond. First, the performance. Bond prices have gone down, so you can buy bonds at a lower price. I like that. Yields have gone up. I like that too. You can earn a better yield on bonds nowadays. The defined dividend rate on this bond is 2.45% on your investment. And it's defined how much you're going to earn in appreciation as well. 22 guidance. The Federal Reserve is committed to bringing down inflation, and they're going to use interest rates as the hammer to pound inflation down. The S&P provides no path to a positive appreciation or yield. My outlook is to diversify into bonds like this one and really grow in 2022, as opposed to potentially being down 10, 20, 25% with the S&P if I just stay strictly in stocks. I think bonds are a way to outperform the S&P this year. And the biggest investment I'll make this year is going to be my time, my analysis, to really get well versed with bonds, because especially if interest rates continue to go up, the opportunity continues to get bigger. So let's scorecard this bond on the three criteria that I have for a good investment. First, are we getting a discount on this bond? We are. We're getting a discount on the bond. We're getting it under the par value of $100, down in the 80s. It's performing well. It's providing a good dividend. And the timing's good. The timing's good to get into bonds right now, in particular this one. And I plan to buy into this bond and buy every month. So average in my investment and continue to build my knowledge base on bonds and have a good portfolio to build on. Quick reminder, this video is for entertainment purposes only. I'm not recommending you buy this bond, any stock, any security. I like to share my experience as I invest, and I own this bond, and hope you found it interesting. Thank you so much for watching this video. Please do me a big favor and like my video. Consider subscribing to my channel and click that bell to be notified when I release a new video. Thank you very much, and good luck investing in 2022.